welcome to the site. Quick review here on trading gap fills and how to trade them. First, I'll show you kind of what we traded today in the chat room. We actually caught our first trade on UA. We got a long off of this initially. This was making a new relative high breakout. So we got long initially. I thought this was going to keep running. It had really good strength, and I'll show you kind of how we traded this. So right out of the gate, you're always going to be on a 1 minute chart, but you don't just want to jump into stocks. So what we did right here is we let our 1 minute chart set up, and what we saw the top coming in 75.35, 75.35. These candles right here we're trading inside. This candle makes a new low, so it's a good thing you don't jump in. This candle trades inside, and this candle finally makes a new high. So this is the first candle to make a new high on the 1 minute chart. So we got long at the break of the prior high. So a new relative high. So the prior high was 75.25. We got long, tried to get long 75.26, ended up being a little higher than that because it moved pretty quick, but 75.33, 75.34 versus 75 bucks. So 74.99 stop, and then we were selling up here near $76. So that was our first trade right out of the gate. Started the day off pretty decent. I kept half, and when the stock pulled back, actually ended up getting stopped out of the other half with a small profit. Not nearly what I could have had. The stock ended up continuing to rise. However, you're never going to catch it all. So as soon as you see the stock kind of doing this right here and kind of coming back in, I'm going to go ahead and take profits, especially if there's something that's moving like this. This is a pretty big rip for this particular symbol. Okay, we also got a long trade on this on gap fill, which I'll go over in a second. Another trade, our biggest trade was on O'Reilly, O-R-L-Y. 5 minute setup right here. We were watching this out of the gate. Again, the key thing with any trade is that the day chart makes your trade. So all-time highs, momentum trades, they can be very good momentum trades, especially on an earnings beat like O'Reilly had right here. But you want it to be a breakout charts, breakdown charts, plays off support and resistance, however you want to do it, but you got to make sure that the trade's defined. And I like to trade these big breakouts. So UA was a potential for a breakout. Again, we still made money on it even though it ended up reversing because of our money management rules. O'Reilly here is a fresh all-time high breakout. And if you pull up your 5 minute chart, this is how we traded this one. 5 minute chart comes in, starts putting in a little flag. Now, I didn't get long on this break right here because the stock on a 1 minute chart is still kind of drifting in and making lower lows. I want to see some kind of setup and consolidation. So right here, I want to see some kind of setup where I can get long off of a 5 minute chart or a 1 minute chart, because as of right now, if this comes in, pops up right here, and then reverses, it's making lower highs and lower lows. So you never know if it's just going to pivot and come back down. So I try not to trade that initial pivot. I want a setup. And what I mean by that is I want some kind of inside bar or doji bar, which I got right here. And what I typically do is I'll trade the break of that high. So now we've got 15 minutes of solid price action. I'll trade the break of that high. So you can see this is an inside bar. So 205.69 is the high right here. 205.67, and I'm going to trade the break of the high. So 205.68 ish entry. We actually got in a little less than that, 205.51 and change, versus the low of that 5 minute bar. So 204.88 stop, because if it comes back up and then it takes out this low, it's gonna probably be weak and drift in, and we don't want to be in it anyway. And we sold on this one through what's called a VWAP squeeze, which I don't have VWAPs on these charts, but was a very nice squeeze. We actually called this one on Twitter too, but sold this one through 210, or up to 210. Sorry, not through. You're never going to catch it all. Again, I tell that to everybody. You're never going to catch it all. You can't expect to catch it off. It keeps running on you. Now, what I try to do is sell half and keep half on this particular instance because we were up so much on it. I went ahead and took the whole thing. So ORLY, that was a good trade. Baba short, another good trade for us. Again, relative breakdown. You have a fresh trigger right here, 87.36. Now what I did is I waited and I was watching the price action on a 1 minute chart and a 5 minute chart and got short on the break of 87 with a stop at the high of the bar. So 87.08 stop, and we were covering down here near the lows. Took another short on it and lost money. Took another short on it and had a small gain. We're trying to take this one again, because that day chart was set up really, really nice. Still net $1,600 on this trade. $4,000 on ORLY. UA with 2 wins, a couple small losers. Glue, which would have worked had I held with my original stop. But as soon as I see kind of 3 bars on my 1 minute chart kind of coming in and not really hanging in there, so if I see my 1 minute chart kind of drifting in, which I did right here, I typically just go ahead and get out. It's typically better. I had to stop at 449. Now, had I kept my stop, I would have had a game, but it was only a 7-cent loss. So not the end of the world if you lose 7 cents on something. All right. Also, QCOM small loss, less than 7 cents on there, or about 7 cents. And that's really all we traded, net 68.54. So let's talk about this UA trade. So UA, when you're trading these gap fills, you want to trade extreme examples. I try to trade extremes, unless you're doing the SPY. The SPY is very reliable on all gaps, okay? But what I try to do when I'm trading these fills, and I've seen some crazy ones. I've seen some 10-point sell-offs and then $12 rips off gap fill. So I've seen some crazy ones, but you don't want to aim for the high, and you want to do the best you can to protect profits because you're going against trend. So ideally what you want to see if you're going to trade the gap fill is you want to try to trade in the direction of the overall chart. So we already went over UA. So you've got this kind of low to the left, high to the right chart, which means that you've got buying pressure on the day chart. So this would qualify for a long off of gap fill. Now, once you get your gap fill on your 5-minute chart, what you want to see, so this red line marks the close, and the gap fill is counted on the close, not the high. So it's counted on the close. Once you hit that close, is you want to see a relative high bar come in with a bottoming tail. So right here, we don't get a relative high bar with a bottoming tail. Now right here, we do get a relative high bar with a bottoming tail. And then what I like to see, so you'll get even more confirmation, what I like to see is 2 consecutive 1-minute bars higher. 2 consecutive 1-minute bars higher. And if you get that going into the close, now sometimes if you trade way below, so let's say that this stock closed, so this is our close right here. Now let's assume that the stock closed somewhere up here. If you trade way below the close, it's not going to work. You want to see that the stock's trying to gain support through the close. And another important thing is you want to focus on trading extreme. So a 30-cent gap is not really extreme. Okay? That's not really an extreme case. An extreme case right here is from the high to the sell-off to the close is a big sell-off. You have 76.54 as the high right here, and our close is 73.56. Now our standard ATR, which is the amount of room the stock typically moves, and I have that on this chart right here, I'll bring this over just for a second here, is 197. So if we trade over 2 points down to get to that close, you know that it's probably going to have a bounce just from the nature of the range that it's moved down. It's moved the entire trading range, so at least it'll be good for a bounce, hopefully more. So what I do is I flip to my 1-minute chart. So we confirm that we have a high relative volume bar. This would be the textbook ideal setup. You go to your 1-minute chart, and on that second consecutive high on the 1-minute chart, because prices work in waves, right? So you're going to be making lower lows and lower highs, and you're going to be making higher highs and higher lows for a little bit, even in a downtrend, and then you're going to come in and make lower lows, and you're going to come in and make higher highs. So what I try to do is I'm waiting for that second bar that makes a higher high and higher low on my 1 minute, which after that volume bottom comes in right here. Now I was long 73.54, so you can see right here, higher. This is our first higher high and higher low, our second higher and higher low through that closing print. Now I'm long. So where do I put my stop? I flip to my 5-minute chart, and I want to be long versus the current 5-minute bar. So we were long this 73.54, 73.60 with a stop 73.25. Okay. Now you want to start selling at whole numbers, at least half. Now I should have got out with a lot more profit, but as soon as this ripped through 74.24, I'm selling half. Okay, and I'm adjusting my stop to break even because I want to see if the rest can run on the house. And again, I've seen some crazy ones. So these things can run. Now, this one ended up pulling back and getting stopped out. But again, if your money management allows you to manage your profits very tight and manage your trades very tight, even if it doesn't continue going, it's still a support level to make money. So hope you learned something on this video, and hopefully we'll see you tomorrow in the chat room. Everybody have a good night.